Doing the same things like everybody else and expecting different returns does not make much sense. We have to use different approaches, and that's what we're going to do in this video. We're going to look at data most people are not considering. We're going to look at the crypto macro cycles in representations that you might have never seen before. For example, isn't this interesting? It is Bitcoin's price today throughout the different years. So we're currently at 108K. 1 year ago, we were at 56K, etc. Doesn't this put the risk of Bitcoin into perspective? If we just hold for long enough, we get exponentially bigger returns. Now have a look at this. This is Bitcoin with yearly candles. Again, we are zooming out. We are taking away a lot of the short-term fluctuations to just have a look at general patterns. And I'm not saying that patterns have to repeat themselves, but it's still interesting to look at this. So we had green, 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 then red, green, 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 then red, again, green, 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 and red. A 4-year cycle. Now we are at green, green, and green again. This year should be bullish, and maybe next year, 2026, could be bearish if, of course, history is doing the exact same thing as it did in the past. Nobody knows, but still interesting to look at this, right? Let's say we don't have interest in buying and holding Bitcoin over many, many years. Let's say we buy it today and then we just hold it for 1 year. For many countries, that's the minimum holding duration in order to sell Bitcoin tax-free. What kind of returns can we expect, and how likely is it actually that we're making money this way? That's answered in this chart here. So this is the year-over-year return on investment. The Bitcoin price is in orange and the percentage change, so that's the y-axis on the right, is displayed in green and red. We can clearly see that over the years, the percent returns of Bitcoin go down. We can also see that most of the time, after 1 year of holding Bitcoin, we tend to make money. Yes, there are periods, and there were even times where you could have lost 75%. But let's say during that time, right after a 75% loss, you were courageous enough to buy once again, you would have made pretty much all your money back, right? This is the idea of dollar cost averaging. We don't just buy once, we buy it several times over time and take advantage of low prices in the process as well. The fact that Bitcoin still can more than double in a single year should be reason enough to at least learn a thing or two about the asset class. Here's another rather uncommon way to look at Bitcoin. This is Bitcoin's price over the years with a 4-year cycle. So we're going in circles here. And since Bitcoin never lost money over the course of 4 years, this line is expanding further and further out. This is, by the way, a logarithmic scale. So it's no surprise that now in the future, every single line will get closer to the one prior. 4 years ago, Bitcoin was at around 40K. Now it's at 108K. And so with that chart, we can say, for example, what's the minimum price 1 year from now? We're likely going to be above 23K. That's not necessarily a very courageous prediction. Let us stick with the 4-year cycle theory. The idea is that because Bitcoin's newly issued supply gets cut in half every 4 years, the price should go up every 4 years, at least within the span of 4 years, because Bitcoin becomes more rare over time. Again, we see the long-term Bitcoin price over here, and the vertical lines is whenever the Bitcoin halving happened. The green shaded area after that is 1 year post-halving. So the idea goes, as Bitcoin becomes more rare, the price should rally in the 12 months post-halving. This was true for 2012. This was also true for 2016. It was a bit less true in 2020. And now it seems like while the price of Bitcoin did go up in 2024, the rally is much more modest. Now let's look at some data that might help us to time the market, the cycle bottoms and the cycle peaks. Now there's a very popular indicator called the Fear and Greed Index. Is the market currently fearful? Is it currently greedy? The idea is that we should buy when others are fearful and sell when others are greedy. But does this indicator really work that well? If you're asking me, I don't think so. I don't like the indicator. Just have a look at Bitcoin's price data since 2018. When the market was fearful, this indicator showed red. When the market was greedy, the indicator showed green. Had we sold whenever the indicator hit green, we would have missed out on a massive rally from 13K all the way to above 60K. Had we bought when the market was fearful, then we could have entered already at 40 or 35K and you went all the way down to 15K. My impression is that this indicator is just a time lag to the price development. If the price went up, the indicator turns greedy after a while and vice versa. The issue is that Bitcoin does move in trends. I've actually made a backtest on this. I calculated the best moving average for Bitcoin, which is, by the way, the 120-day SMA. It's best to follow the trend, at least in the medium term for Bitcoin. It's only good to go against the trend if we've already fallen a lot by 60, 70, 80%. But in general, Bitcoin moves in trends. And my impression is that the fear and greed index triggers way too early. Here's another interesting indicator. What is the realized price percent change over time? If you look at half a year as a rolling time frame, it's clear that over the cycles, the percent returns get smaller and smaller. And what I find fascinating about this chart is that profit realization tends to be in the hundreds of percent, right? It was 400 in the top over here, 200 in the top over here. And still recently, even though we are going up rather slowly, it's still 40% or so over the span of half a year. But the realized losses, they are rather modest, right? It's minus 15% in aggregate, or over here, minus 13%. So really, people tend to not move their Bitcoin when it's down. When Bitcoin is in losses, people just continue holding it and waiting it out. The brand of Bitcoin seems to be strong enough that whenever there's a price crash, whenever some long-term holders are selling, that the people that just entered into the market, they just keep on holding and let the long-term trend take over. That's why we see higher highs and higher lows over the long term. There's simply more and more long-term investors, and if you didn't buy at the right time, it's not really a problem. When in doubt, just zoom out. And so, of course, as an indicator, it does make sense to buy whenever the market as a whole is realizing losses, right? When people are giving up on crypto, that's when we want to get in. Again, it happens roughly every 4 years. So in 2012, 2016, 2019, 2020, and 2023, which would indicate maybe 2026, 2027 could be another potential decline. Have a look at this. This is the monthly RSI, the monthly relative strength index of Bitcoin. Unfortunately, those tops tend to go down, the bottoms go down as well over time because the volatility of Bitcoin goes down. But you can just draw support and resistance lines. Then we've got this chart over here. So currently, as we are at 108K for the Bitcoin price, we are not yet close to peak RSI level. So we're probably not yet at a cycle top. There is likely more room to grow. In the past, this indicator worked very well. So a cycle top over here, a cycle top over here, and over here, and here as well. The same is true for the bottoms. Here's a nice buying opportunity here as well, and here as well. And currently, in the grand scheme of things, we are of course not cheap, but we are not at peak momentum levels either. This is basically what the RSI is measuring. It measures the price change relative to the volatility over time. The best time to get into Bitcoin is when everybody is realizing losses, or at least when most people are in net unrealized losses. So whatever currently is the average cost basis of the market, this has to be looked at very closely. When there's capitulation, when the market as a whole is in net unrealized losses, that's when we want to buy. So this is an oscillator. It hovers around 0. Whenever we are in the green area, the market as a whole is in losses, and that's when we want to buy. So this here is the Bitcoin price during the same time. So this white line, again, it shows us very good entry opportunities. Right now, the market, of course, is not anywhere near unrealized losses because the price is close to the all-time high, but we aren't that heated either. The net unrealized profit and loss is at roughly 50%, and euphoria greed zone starts at 75%. Here is the realized price over time. It's currently at 48K, and it tends to increase relatively monotonically because, again, there isn't that much loss realization when the price is going down. People simply just tend to hold their Bitcoin. At least the vast majority does. And so at some point, the price, of course, will again meet the realized price. But the question is, will that be because of a crash in 1 or 2 years, or will it be because the realized price has simply creeped up so much because people have long-term realized their gains? It definitely does not make sense to just wait to hit those buying opportunities. Of course, if we do fall below, it's great to get in. But if you're waiting just for the price to hit the realized price, we can miss out on a major rally, as happened in 2016, 2017, and the beginning of 2018, right? Imagine you were over here, you saw the price is 50% above the realized price. You waited for the price to go below that. It never happened. And instead, we went up by 40x. 40x at the current price is of course a tall order, but Bitcoin could easily double from here as well. So I'm not waiting for the price to go below the realized price. I do continue to hold Bitcoin, but I do set myself up in a way that in case we do see a crash, I could sell other assets and then put this into Bitcoin. So I have quite a bit of gold and silver on the side as well, and I would then sell that in case Bitcoin suddenly sees a massive crash below the realized price. Here's the market value to realized value. The issue is that this is going down over time, right? This just looks at the current price relative to the realized price. In other words, the difference from the current price to the realized price, that delta tends to shrink over time because the volatility is going down. But there is an adjustment for that, and that's the market value to realized value Z-score. That's this chart over here. So then we divide the average profit of the market by the current volatility. And that tends to go down a bit less. And again, it shows us that the market currently is not extremely heated. We are just slowly going up relatively steadily and safely. If you're looking for exit opportunities, it does make sense to check out this indicator. This is the value days destroyed. So this turns red whenever the long-term holders of Bitcoin, the whales, when they suddenly start moving their Bitcoin. It's not necessarily the perfect top signal. So it signaled over here at 40K and Bitcoin still went up to 60K. Over here, it signaled at 72K and we still went up above 100K. But it is a potential medium-term profit-taking opportunity. If the long-term whales are taking profit, it might make sense to also, at least to a degree, follow suit as well. Now, it's quite common that altcoins tend to underperform versus the major benchmarks, versus Bitcoin, Ethereum, and Solana. For example, have a look at this. This is Optimism. It's within the top 100 largest cryptocurrencies, and it's just doing worse than Ethereum constantly. But we can also flip that chart around, right? This is now Ethereum relative to Optimism. So we can make money when most people are losing. Or have a look at this. This is Balancer relative to Ethereum. Again, when we flip this around, we've got a very nice performance chart. And the story is always the same. This is the token inflation of Balancer. This is the token inflation of Optimism. It's all going up over time. The early investors, the team, the insiders, the KOLs, they are all offloading over time. They get allocations, they get vestings, they might unlock their tokens a few months or years after launching of the project. And that creates constant sell pressure. And that's why we see so many altcoins doing so poorly long term. The demand for altcoins in aggregate doesn't grow as quickly as the supply does. Whenever I show those token supply charts on this channel, it's all from Tokenomics AI. So feel free to just go through that website, check out how much additional demand there has to be for a single altcoin just for the price to stay flat. Usually the altcoin demand isn't as high as the additional supply that hits the market. And so that's why the majority of altcoins is red over longer periods of time. That's why Bitcoin outperforms most other assets, because Bitcoin can't inflate like all of those altcoin projects. The Bitcoin inflation is only 0.8% per annum. Ethereum has currently an inflation of 0.7%. And most of those altcoins have much higher token inflation. That's why they are down. And so that's how I personally navigate this market. I'm simply betting on falling relative valuations. I'm of course not sharing the individual positions over here. This is part of Premium. It's down below, thebitcoinstrader.com. But in general, it's about having the odds in our favor. We don't want to try to pick the needle in the haystack, the 1 or 2 or 3 altcoins that go up. We just bet on the majority of bad tokens continue to stay bad, right? Why would they suddenly turn around when there's so much new supply hitting the market regularly, at least in aggregate? On average. Here's my performance in the last 2 months. So this is now via perpetual futures. I'm going long the asset that I'm long-term bullish on, and I'm going short the asset that inflates crazy like this and that just continues to go down long-term versus the benchmark. And so our community, of course, does very similar trades as well. This is the Share Your Wins channel where people show what kind of altcoins had been shorted and what kind of returns are possible. And it's all about risk management, right? Let's have a look at this. Stop loss move to 1.1, let the rest run. Because while it's nice to have the odds in our favor, it's still important to have proper proper risk management in place. If you get completely wrecked just because of a single short squeeze, just because there's short-term manipulation in a single asset in a short period of time, you don't want to lose everything. You want to have proper risk management. I'm of course sharing my personal trades in Premium as well. So this is a screenshot. This is the kind of opportunities we are looking at, right? We want to be in a long-term downtrend and ideally at the top end of that long-term downtrend. And then we open a short over here and wait for a quick dump to then take profit to then go on to the next poorly performing altcoin. Have a look at this example here. This is where I shorted WorldCoin. We got some nice individual gains here as well. And of course, the community copy traded that as well. So of course, I don't encourage just to blindly copy every single trade that I do, but it can be a first start to make initial gains. Again, before starting any of these kind of approaches, make sure that you learn about how to properly do bet sizing, how to do proper stop loss setting, how to also trail those stop losses over time. So there's this video here, risk management with relative valuation bets. You can also check out this using perpetual futures on hyperliquid to bet on relative valuations. Both videos are roughly half an hour in length. So feel free to join us. It's currently $125 per month. There's also a 1-week money back guarantee. So in theory, you can just sign up, you can watch all the tutorials, and then after 6 days, you decide it's not for me. You can ask for a refund. I'll refund everybody, no questions asked. But of course, I hope that you will make money simply just by getting inspired by the community and by potentially copy trading me, and then stay subscribed. So feel free to check it out. The link to Premium is directly over here. Just click on that. It will lead you to the sign up page. If it's your first time here, feel free to subscribe. I publish this regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in Premium. Cheers.